Good morning, everyone, and welcome to the European crossover webinar. And we did just see German GDP come out, flash that is, and came in minus 10.1 quarter over quarter with a year over year down 11.7. Earlier, we did get Spanish HICP flash, as well as German unemployment numbers came in about 5 minutes ago. And that came in minus 18,000. They're looking for a gain of 43,000. Unemployment rate came in at 6.4. And we do have Mexican unemployment, actually not Mexican, I'm sorry, Italian unemployment rate. That just came out 8.8%. We do have Mexican fiscal balance later on. And then Eurozone business climate and economic sentiment and industrial sentiment. That's going to be up at the top of this next hour. And then at 8 a.m. Eastern into the States, we will get German CPI, preliminary CPI. And of course, along with jobless claims, we'll get getting advanced GDP, and they are looking for a fall of 34% on advanced GDP. Of course, as I said, jobless claims. Nothing after that. So at 8:30 Eastern, then that'll be the end of it. Obviously, we've gotten past FOMC. We're going to pull up the euro here. We're a bit down here. Yesterday we had our bias chart resistance at 1814. The high was 1805. And currently at 1759. We had some different levels there that I was sharing in the chat. 1814 and 1827. If we got past that, it was 1854, I think it was. But that 1814, we've been looking at that all week long, and that held up very well. Cable's still pressing up a little bit here, 29.89. We actually have a little bit higher bias chart resistance for today. Whether or not they'll be able to plug away through 130. We did get some pretty good volume come in just above that 130. Actually, in both those, in the cable and the euro at the time, and then we saw immediately it sell off right after we saw some real good strong volume, not strong but pretty decent volume come across in the futures markets for the those two respectively, the euro and the cable. I'll take just a quick look at the Aussie. Aussie pairing back a little bit, and respectively, let's take a quick look at the New Zealand. In our analysis from Asia, I was looking for that to go on and pair back. And we are pairing back a bit here. Actually, you can see here, we posted, and I remember sharing that, we posted a pretty good gravestone doji on the 2 hour. I think we're doing the analysis early Monday, and I saw that, and I was like, wow, look, and we had some pair back, and it looks like we're open to moving lower. This is on a 2 hour chart. You can take a look at here on the daily. Yeah, you don't see a whole lot on the daily, but on the 2 hours, it certainly looks like it's opening to weakening. At least that's what I'm seeing here, looking out. Obviously, a big mover was the gold market. I just now rolled it over to the December, but I think my work was done on the daily. I mean, on the August goal. So I was put here, and one of the things I talked about was this long-legged doji. We did finish above there, but we're kind of looking kind of weak here. but I've since gone to move to the December. I don't know if this would carry over to the December. Um, oh, yeah, no, it doesn't. You see, but you can see it's basically the same setup. You do see the long-legged doji, but we would be tracking the December going forward. Also, respectively, today is going to be a pretty big day. We do have earnings coming out for Facebook, Google. Um, take a look here. I don't know if I almost forgot. Bear with me. Okay. Here we go. There we go. So it was, yeah, so we have Amazon, holy smokes, Amazon, Apple, Google, what they call it Alphabet. So it's going to be pretty huge. Amazon, Apple, Google, and somebody else today. I don't remember who it was, but once again, Amazon, Apple, Google, and somebody else is here today besides them. But that's pretty huge. It's going to be a pretty big event, but that'll be after the close today. We can go and take a quick look on the equities. And you can see here where the NASDAQ's having trouble with this 10,700. Come back up here and rotated lower here. We're kind of hanging around near these lows. And I haven't paid that much attention to the ES. We won't move here. I haven't tried to. I did. I think I got one or two trades off of the Nasdaq earlier this week. I think Tuesday. I know I didn't do anything yesterday. I try to stay away from it to try not get with those earnings reports. And we were expecting big swings, but we have seen them rotate a little bit lower. On Monday was really a tough time for some people where they kind of got, and I've been in that situation before where we just kept working hard and hard and hard. And then in Asia, they went a little bit further, and then it was just down, 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 and steady. And actually, it's been some steady moves down. I mean, we've been actually, and maybe it's been with this week, you have seen some moves here, but once again, you'll get then just a steady drip lower. Obviously, a much, pronounced move here, but this is on the 5-minute chart. But you can see here that some of these moves, look at this, it's just up, up, up. Not really a lot of two-way action, but I think that's as they were looking into this weekend, people didn't want to get knocked about, and they were expecting some big moves throughout the week, and that really has not materialized. Look at NASDAQ has not really materialized this week, although we've moved in one direction. But as far as bigger moves, but now today, post the close, we should see some big moves with those Apple, Amazon, Facebook reporting. And obviously, as I said, one big move was obviously the gold market. That's going to pare back a bit here. I haven't updated all the work, but I mean, this is just I've rolled over into the December. Here we were with the August. I'd mentioned it was key on that 1965 on a 2-hour close, and with the FOMC, we were right there, and we were never able to get a 2 hour close above 1965, and you can see us rotate lower from there. Although, let's just say now the front month is now December. We'll go and take a look at the news, and then we'll start the analysis from here. So Australia and New Zealand dollars climbed tantalizingly close to major chart targets. Australia and New Zealand dollars paused near multi-month highs on Thursday as reliably dovish outlook from the Fed kept their U.S. counterpart under pressure, bringing major bull targets temptingly close. The Aussie stood at 71.78, having touched a fresh 15-month top overnight at 71.97. That left it within spitting distance of 72.06/07, the double top from February and April last year. The Kiwi stayed at 66.51 after hitting a 7-month peak 67.02. Again, it was within striking distance of major barriers. Fed Chair Jerome Powell left the door wide open to further stimulus on Wednesday as he warned a surge of cases in the novel coronavirus was weighing on economic activity. Central banks in Australia and New Zealand are expected to stay on hold for the months to come, and the RBA meets next week and is certain to keep rates at a quarter basis point, although it will likely express concern at the outbreak of coronavirus in Victoria State that had been locked down the city of Melbourne. Data out on Thursday underlined the damage already done to the housing market, with approvals to build new homes falling to 4.9%, pointing to a sharp slowing ahead. Approvals led construction activity, noted CBA economist Belinda Allen. Overall, we expect housing construction to fall by 25% in 2020. Debt dealers were still celebrating the successful sale of 15 billion in Aussie dollars. Also, 77% of the offer went to offshore investors, twice the usual average. That is the highest ever allocation of offshore, demonstrating that despite historically low absolute yields on a relative basis, the Australian dollar continues to provide a high-yielding, highly rated opportunity for the global investor. And on to the dollar. So the dollar bogged down as investors turned to Congress for stimulus. The dollar was mired at a more than 2-year low on Thursday as investors grew increasingly worried about the economic drag of the surging coronavirus cases in the U.S. and looked to a fiscal rescue package stalled in Congress for another stimulus hit. Overnight, the Federal Reserve kept pressure on the currency by leaving the door open for further easing. Against the euro, the dollar was just above a 22-month low of 18.07, touched overnight. The U.S. epidemic has intensified since June. California, Texas, and Florida all posted one-day records of fatalities on Wednesday. Fed Chair Jerome Powell said the new wave of cases were harming the recovery and indicated that more fiscal support would help when asked what more could be done. However, the negotiations are at an impasse on Friday for extending the $600 per week unemployment benefits. Democrats are resisting a stopgap extension in favor of pressing for passage of a comprehensive bill. Concerns around rising virus cases and the impact on the labor market and activity will be further compounded if Congress cannot agree. The dollar has been tumbling as investors see the virus raging in the U.S. and begin to doubt the conventional wisdom that the U.S. growth and investment returns in dollars can best most of other countries. Advanced quarterly GDP will likely be one for the record books, with economists anticipating a 34% drop in annualized economic output. One possible outcome could be the adoption of an average inflation target, which would raise rates lower for longer in order to generate an overshoot with the down the track. Elsewhere, growing tensions about global tension with China dragged on risk sentiment, and Sino-U.S. relations have deteriorated sharply over issues ranging from the pandemic to Beijing's territorial claims in the South China Sea and its clampdown on Hong Kong. So with that, we're going to move into the analysis. Okay, so the euro rallied into another closing high post FOMC, although coming up short of the bias chart resistance that we had listed, which was 1814. Additional weekly levels would be 1854, and support will be 1680. So we're keeping our 1814, which we had that just as we didn't even offer a secondary resistance level as we did with many of these other pairs. I felt rather confident with the 1814, and actually when we looked at it closer, an additional 11 was 1827, but as we said, this held it in check. Support, though, is going to be, as I mentioned, this right here, is going to be 1680. And moving on to the cable. So the cable pushed further, closing near 130. Thursday's bias chart resistance will be 3038, with support at 2896. So we may be able to blow a little bit past these stops, but we do have resistance at 3038. Yeah, let's pull this back. And 2896 for support. And we'll try and pull this out and see if we can see this a little bit closer. So you can see what I'm coming up with the 3038. This is a close here. It's also the close on that bar too, and offers resistance right here on this bar, and pretty much close to the low here. So we're looking at 3038 as a potential here on resistance. With that, we'll go on and move on to the Aussie dollar. And we see the Aussie a little bit under pressure. Aussie closed at a new high post FOMC, albeit shy of 72 cents even. Resistance will be 72 with support at 70.83. And I am getting the feeling, especially here in the Kiwi, is that we are starting to lose momentum up here. And I think I noted that on the Asian analysis for the Kiwi. You see it a little bit more pronounced on the 2-hour chart. But now you can see this is actually going to be a bearish. If we were to close here, it's going to be a bearish engulfing cloud here, or bearish engulfing post here. It'll actually engulf yesterday and potentially could engulf the prior day. Now, I always look at the bodies. I don't necessarily look at the wicks because to me, the body's the most important. So currently right now, it has engulfed the prior day and could potentially engulf the day before that too. Now let's go move on to the Kiwi. So the Kiwi kept in a tight range on FOMC day, closing minimally positive. And you can see that we closed just a hair bit, but it was a pretty tight day. Resistance will be 66.92 with support at 65.69 as the pair appears to be losing upside juice. So you can see here we're kind of like hanging around, but you can feel it. It's losing momentum, and I think we can break lower. So once again, support will be 65.69. Okay, and with the dollar CAD, and look, we're seeing a nice little turn back here. Look at that. Now it looks like this is going to be engulfing it. The dollar CAD continues to hold down the fort with support at 33.40. A break below 33 even will find support at 32.75. Resistance will be 33.83. Well, we're actually above that right now at this point. We're pressing along here. So right now, 33.40 has held up very nicely too. And let's take a look on a 2-hour chart to see where we can find the next support level, or I mean resistance. Boy, nice run here. Look at this. We Guso stops there. This is going to be 34 even because the next real resistance comes up here, and we've already had a pretty good run. Not saying that we can't go any higher, and we may. Um, This is a strong 2-hour close. Look at that. Look at all the bars it took out. Now, it didn't quite take this out on a closing basis. Um, But we are past FOMC day. Buy mode too, obviously. See if we see anything here. We can go there. 34.23. As strong as it is right now, we'll go for 34.23. 34.23. Still remains bearish. Let's go on to the peso. So the dollar peso is making a stand just sub 22 even, suggesting the downside may be waning. And obviously you're seeing this market already turn around here. Support will be 2180 with resistance at 2220. You can see the 2220 right there. So 2180. And with that, we'll move into the dollar yen. So the dollar yen closed slightly lower within a confined range. Support remains the 452 with for a test with resistance at 531. We've actually made a little bit of a push today. Let's see on a 2 hour what we are. Yeah, they made it right there. Almost did. The high was 528. So we have resistance at 531. And we're still going to keep this 452 for now. And we'll go to the cash dollar index. So the dollar index held the secondary bias chart support on FOMC day at 93.17. The day's low was 93.18. Support will remain the same with a break lower challenging 92.89. Resistance will be 93.91. So this 93.17, the secondary support held nicely. Missed it only by one tick. And the upside is going to be 93.91. And with that, we'll go and move into the cross rates. So we are finally starting to see this Kiwi yen start to slide a little bit in light of the Kiwi weakening. We had 69.50. We've actually looks like we've come down to right to 69.50. Not bad. Although potentially I think we can still work a little bit lower going forward. So actually I would look for support right there at 16. Well, it's not much lower. It's 69.44. So we'll just move it a little bit lower. But I still think we're going to work low on the Kiwi. And then resistance will be now the 70.07. You can see that right there. 70.07 is going to be resistance. See that right there. Onto the euro yen. So we had resistance at 23.62. We've actually made a run up here today. We went up a little bit higher, up to 23.87. That 24.01 is still staring us up in the face, so we'll go with the 24.01. And we had support at 22.78. I still like this 22.78, so we'll keep that. That'll stay steady there. And the euro Kiwi has continued to move higher, which makes sense considering not only how strong the euro has been, but also the weakening of the Kiwi. So we had, and actually we missed the euro odd. We'll get to that. But the euro Kiwi were already there anyway. Euro Kiwi, we had 76.76. It's continued to poke along here. Let's go and take a look at a 2 hour. We can get a better look on here. Right there, 77.49. Actually, 77.56. Probably also look at a fib off of this area here. Well, no, we went even lower there. But that's not an absolute high, but the most recent one from a dip here. We just got past the 50% there. Let's go and take a look at the euro odd. That should have been on this side. That's odd. Let's take a look here. We are beginning to work up a little bit here on the euro odd. We had 64.33. We've actually come up here to the 64.79 area here. So we'll go with that. And we'll pull this back so we can take a look at the 64.79 here. You can see they're coming off of the closes here. And support will go into the 2 hour. You can see all these touches coming across here. We'll put it right there. 64.07. And with that, we'll move into the ASEAN. Turning back just a bit here with the ASEAN, and we had support at 74.70. That's still holding up overall. We're not seeing any big movements at this time. We'll stay with the 74.70, although I think in time it will break lower. And on the upside, we'll take a look at the 2 hour. $75.50. Taking a look here at the guppy, we are starting to see this gain here, obviously with the strength in the pound. Let's go and take a look at a 2 hour chart. $36.57. Came pretty close. Support's fairly clear. It's right there. 35.71. And lastly, we'll wrap it up with the sterling odd. See the euro break a little bit here. So finally going start to see a little bit of upside here with sterling odd. Resistance is going to be right there with this body close. Right there, 82.66. And we'll see if we can zoom it in a little bit. There we go. You see here? And that actually comes in specifically at 82.54. Let's make that. And support right there at this close here. 80.10. That's a long ways away. They've turned things around, so we'll just go with this level here, which is 80.37. And that's going to do it for the analysis. And we'll see in the chat room. I'll go in and post the bias chart. And I believe I'm going to be on the face webinar. I may be looking at NASDAQ and maybe gold, but definitely I would think NASDAQ with today's big day. But anyway, thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.